Lately, we have been on a bit of a bull run for microcaps. We have seen a lot of good companies, a lot of good stocks at 52-week highs. AirIQ is the topic of today's video, and although it's up in 1 year 50% and 5 years 186%, this is a well-performing company. It's still off its recent highs of 50 cents and 55 cents Canadian. So as good as this company has performed, it's down from its most recent highs. I want to take a look at why and see if this is a company I want to put on my watch list. You are watching Common Sense Investing. My name is Cameron. Let's go find a great penny stock. As always, I talk a little bit about what the company does, then I'll get into the financials, and then I will present some of the red flags why I would not invest in this stock and some of the green flags why I would. This is their investor presentation from September of 2023. They talk about some of their accomplishments from 2023, their fiscal year end, and they were quite good. I mean, 13% increase in recurring revenue to nearly $3.9 million, 16% increase in total revenue to approximately $5 million, 52% increase in net income. I'm not going to go on. You can read. I would look at this and say, if this company can have the same year in 2024 that they had in 2023, I think shareholders would be happy. Since 2017, this company has had a 102% increase in high margin recurring revenue, and this seems to be going consistently up. Not a slide that I see very often. Book value per share, they say, has gone up 38% CAGR, compounded annual growth rate. And while the company would like you to focus on their steady, consistent organic growth, especially the recurring revenue growth, they are saying that there are growth opportunities here through acquisitions, partnerships in the markets, and other solutions. And I always say, let a company convince you to become a shareholder. Why they say you should choose AirIQ: predictable high margin and growing recurring revenues, consistent EBITDA and net income profitability. Everybody's looking for that profitable microcap stock in 2024. Undervalued stock providing upside opportunity for investors. That's a bit of an opinion. Significant cash balance for potential acquisitions and share buybacks. We just talked about that, where they have opportunities for growth, but they need the cash to do so. We will go look at the financials, and a significant increase in book value per share. And sure enough, just as I was going through their investor deck and thinking, I have covered a company just like this, it is Beware Holdings. They have a slide here talking about their competition. You have some fantastic comparisons here. I like when a company is bold and brave enough to put themselves up against the competition and say, look, we're either better or at least equivalent, right? We should be in the same conversation as Beware Holdings, because I haven't talked about what AirIQ does yet, right? So Beware Holdings is a company that many people have been interested in. I've covered on this channel. This is a mobile Internet of Things company. It is offering tracking through mobile Internet of Things. This includes packages, products, trucks, whatever you could put a tiny little piece of internet, tiny little piece of technology on. Beware Holdings wants to track it for you. AirIQ is very similar, except they do fleet management through GPS tracking. So very similar things, but just tiny different niche markets. Beware Holdings' total addressable market is probably arguably larger, because mobile Internet of Things is very encompassing over a lot of possible solutions for a lot of different industries. AirIQ is typically looking at just fleet management, right? But I mean, there's still a lot of potential. There's still a lot of opportunity. AirIQ can be there as a solution. And I wanted to make a comparison here because I know a lot of people invested in Beware Holdings, and I haven't met anybody yet that's invested in AirIQ. AirIQ has a market cap of 12.9 million, Beware Holdings 24.5, so almost double. Growth at AirIQ 15%, Beware Holdings 16%. Cash at AirIQ is 3 million, 4.1 for Beware. Debt of 0 at AirIQ, little under $1 million for Beware Holdings, basically insignificant. Operating cash flow for AirIQ is 1.58 million, whereas at Beware Holdings it is at 820,000. The float for AirIQ, 18 million shares. That's it. Beware Holdings has 68 million shares float. Insider ownership at AirIQ 38% compared to 22% for Beware Holdings. In fact, when I put the two side by side like this, I have to like AirIQ a little bit here with double the operating cash flow, 1/3, less than a third of the float, and a little bit more insider ownership. So I actually give the nod just on these simple numbers to AirIQ. So let's see if they could back it up with a little bit of earnings here. 3 and 6 months ended September 30th, 2023. They are expected to release earnings very soon. That's why I'm putting out this video now. I am excited to see their earnings. Lovely balance sheet here. Cash, $3 million, some trade and other receivables, total current assets of almost 4.2 million. Their non-current assets, stuff that they own, a lot of nice stuff here. They are getting deferred tax assets, which is actually making their earnings look a little bit better than they should be. We need to take that into consideration. Their total assets, though, overall, $9.1 million. When you look at their total liabilities of $1.3 million, this is deferred revenue. We can almost forget about that, meaning that they have almost no liabilities, just a little bit of accounts payable. This is a really nice, relaxing balance sheet that doesn't give me a lot of stress. In the meantime, when I look at this slide, get used to me saying the words a little bit, because over the 6 months, the revenue is up a little bit. Quarter over quarter, revenue is up a little bit. Gross profit is up a little bit, 3-month and 6-month. Their expenses are up a little bit because of that, but not as much as their revenue, because their income before other expenses is going up nicely, and they're getting significant growth in their income, both over the 6-month and the 3-month period. So again, really relaxing, nice, slow and steady growth. Quarter over quarter numbers, really nice consistency. It would be nice to see a little bit more growth here, right? December 31st, 2022, recurring revenue of 990,000. Now September 30th, just over $1 million. This is their hardware and other revenues. So these are their one-time revenues that drive these recurring revenues. Gone from 363. They had the one quarter of 655,000. Most recent quarter 267. So sales are clipping along to drive this recurring revenue growth that they said was up 102% since 2017. They have their total revenues here. Gross profit margin really nice here, right? 60%, 55%, 62%, 58%, consistent and strong. At the end of the day, total net income or loss, they had this, remember, deferred tax revenue that I talked about. This was a nice gain for the company on the balance sheet here, March 31st, 2023. But overall, you're still looking at 1 to 2 cents of income per share. That's pretty strong. And when I look at what management is taking for compensation, not huge. They obviously care about this company, something to consider. Now, don't forget, not financial advice. I'm just one average retail investor like you that likes talking about stocks. This is just my opinion. I could be wrong. I am just presenting. All of my videos are just an introduction. I am hoping to connect good companies, good stocks with good investors, good people, let you continue to research these companies and make your own investment decision. And do not forget, if you want to continue discussing some of these stocks, including AirIQ, down below in the pinned comment, I also have a link to my free Discord channel with around 500 people in there right now, as well as I have a paid Patreon where you get a little bit more access to me and about 100% of my content. Now, for me, AirIQ, the risk versus rewards are pretty simple. This is a nice, simple company. 3 things on each side, right? The risks for me are valuation. If you go look at the Keystone Financial video, I somewhat agree. They're possibly a bit overvalued here, right? This is a slow growth, tiny company, which also means that if anything goes wrong, market cap can go up or down really quickly, right? So small market cap company, it could be very, very volatile. And their most recent quarter was challenging. If you go back through my video, you'll notice that some of the most recent quarter numbers are a little bit down from last quarter, right? So is this a cyclical company or is this going to be a long-term problem? But the rewards of AirIQ are also huge, right? A lot of people love Beware Holdings. This is a very comparable company. In fact, when I look at the balance sheet right now, I would almost take AirIQ because of the lower float. They have a beautiful balance sheet. We have to look at that. $3 million cash, no debt. Maybe they want to grow. I forgot to mention they're also doing share buybacks. Like, there's a lot of ways that this stock can create shareholder value in the future. And valuation, as much as it's also a risk, it's also a reward here because it's not overvalued. I mean, we could argue it's a little bit overvalued by a couple pennies, but we're not talking about one of these pre-revenue stocks that could go down 90%. Like, this is a nice fundamental business holding up share price We just need to go figure out where the growth of this company is going to go, where investor sentiment is going to go, and whether or not it's the right investment for you. So as always, thank you for your time. You could be anywhere. You're here with me. Thank you for watching this video on AirIQ, and I hope to see you again soon.